Very pleased to introduce our moderator, Amal-Lee Amin, Managing Director and Head of Climate, Diversity and Advisory at the British International Investment. Amal-Lee, please come to the stage and introduce your panel.
Thank you. Thank you for joining us, and welcome to the Adaptation and Resilience Finance session. I'll briefly introduce my panelists, but also wanted to give just a little bit of context to this session. I think, as you know, I don't need to tell people here how urgent this agenda now is. The UNEP Adaptation Gap Report for 2024 continues to highlight the significant gap in financing and action that is really needed to tackle and enable climate adaptation and resilience. And I think, unfortunately, as we know, the UNEP Emissions Gap Report has also highlighted that with current levels of commitments on mitigation, we are already, heading towards, I think, between 2.4 and 3.1 degrees centigrade. However, as we've seen over the last year, we are already very close. Global average is already very close to 1.5. So the urgency of adaptation, and particularly to scale finance, is clearly right at the top of the agenda now. And for those of us who've been focusing on this agenda for a few years, I think it's fair to say that since probably COP28, COP29, the focus on adaptation, but particularly also in the role of the private sector, the role of the financial sector, has really risen up the agenda as well. And I think that really reflects a maturing of our understanding of what is really needed to adapt, a recognition that governments clearly have to take the lead. They need a lot of support, a lot of capacity building, technology, as well as public finance. But ultimately, governments also need to really engage closely with the private sector to understand how better to incentivize and increase private finance and investment. And I think at the same time, you know, the private sector typically is better at managing risk. So identifying ways of helping transfer those risks to those who may be better able to manage. We'll hear in particular from Tomás around some of the work underway in Costa Rica with the insurance sector. We'll also hear, I think, very, very importantly, around the role of the financial sector and, of course, the role of the principles for responsible banking, which I'm delighted that we have two very active members of the PRB, of the Adaptation Working Group. So I myself, I just very briefly introduce myself. Amal-Lee Amin, the Managing Director, Head of Climate, Gender and Diversity and Advisory at British International Investment. We're the UK's DFI and impact investor. But I think probably in particular why I'm here and been asked to maybe moderate as well is we've been leading an Adaptation Resilience Investors Collaborative that is mainly bringing DFIs, so DFIs like ourselves, like our French equivalent, Produbanco, and other private sector-focused development finance institutions together around how we can work collectively to really overcome some of the barriers to private finance and investment for adaptation. And we're delighted that UNEP FI are the secretariat for ARIC, particularly because of UNEP FI's leadership on the PRB and the Adaptation Working Group. Because I think what we're all sort of recognizing is that adaptation can be quite complex in that it's very context specific. So we really need to work together to make it as straightforward as possible to actually take action. We need to navigate through that complexity and work to develop some common approaches that can help create as much certainty for ourselves, but also for investors who may be concerned about physical climate risk. So I think that's one of the key challenges and why we're so happy to, through ARIC, to be working with, indirectly with the PRB on this really important agenda. So I'm going to turn now first to Tomás. So Tomás Soley Pérez, who is the General Superintendent of the Costa Rican Insurance and Securities Superintendency. And you, Tomás, I mean, please tell us what you've been doing in Costa Rica. I know you're very active, and I also know that Costa Rica's been really quite leading the way in terms of engaging with key stakeholders, whether that's public, private, around this really important issue of climate adaptation and resilience.
Thank you, Amal. I want to start with a question for you. Did you attend any public educational program in your life? I mean, school, kindergarten, university? Raise hands. Most of you, yeah. Education, of course, is a critical way to give wellness for the population of a country. And may you imagine that the government cut the budget, educational budget, to zero for 10 years? Of course not. This is unacceptable for any country. And why I'm saying that? That is because our numbers in Costa Rica face us that the estimated losses from climate change by 2050 will be approximately 10 years our current educational budget in the country. So that is this is the kind of hits that our countries will be faces with climate change. And that is really hard for any country. But you want, I want to share this number with you. So the fiscal, the economical, and the social impacts will be unprecedented in the future. And for this reason, scaling finance for adaptation is crucial. If we do nothing about that, the consequences will be terrible for our countries. So, as an insurance supervisor and a security supervisor, we have made some works in our country, and I am sure that we need three issues as principal raw material for works. First of all, have a vision. Secondly, share the expectation that the supervisor have over the market. And third, of course, have a plan, have a roadmap. Having a vision for us is very common. Costa Rica is a small, green, and no-harm economy that hosts the 5% of the biodiversity of the world. So this is our main asset for our country. We stopped the deforestation, and we have protected more than 50% of the country in different ways. Said that, we have a vision, and there are a delivery for the government in 2022. There are two main instruments that is important to take account. First of all, our National Adaptation Plan, whose main objective is to maintain the sustainability of the country in the future and to decrease the expected losses of lives and the damages for the country. And the second instrument is the a strategy to finance the recovery after a disaster. And this instrument gives the country a very interesting instrument that will devise some tools to finance the recoveries and to give more fiscal resilience and more economical resilience for our country. In that context, the second issue is sharing the expectation of the supervisor. And the supervisor we began as an insurance supervisor, and earlier than 2015, this process is just 9 years. And we began subscribing the PSI of UNEP FI, the Principle of Sustainable Insurance, and beginning the conversation with the market. And we started with the banking and insurance sector conversations about the topic that we wanted to highlight about climate change risks, related risks, about the best practices, and about building a roadmap. And third, we began with launched 2 years ago our call to action for the financial system. And this call to action was subscribing a roadmap for the country, for our system that took four items. First of all, data. Secondly, measuring the vulnerabilities. Third, the disclosure. And fourth, the supervisory practices. And in this way, we try to navigate with our financial system in order to be essential, in order to have a role complementing what are doing our government and how the financial system will help in this important project. I am so worried about the future. I am so worried about the education, the health, and the future of our next generation. And I think scaling financing for adaptation is the only way to navigate with these risks.
Thank you. And yeah, so the importance, as you highlight, of having the vision and a good plan, and national adaptation plans, which I think many countries are developing. Actually, I've been, in my work, I've been looking at some of those plans to see the extent to which they can guide private sector investment opportunities. And actually one that we've been looking at quite closely is in Zambia, that actually we found very useful because it's helped to provide, and actually it's been supported by UNEP, and it has a lot of very detailed analysis around different scenarios, and is very valuable for guiding us as the private sector to where we can do investments that can support adaptation, particularly at a more system-wide level. I think, what we're hearing from Costa Rica as well is that, the dialogue, being clear around expectations, all of these are really important for particularly the financial sector. And so, I mean, this really, brings us to the other two panelists, starting with you, Denisse, as a Produbanco, from Ecuador. And you've been personally involved in the PRB adaptation working group, working with peers on these issues. Can you tell us, what the working group's been doing and some of the issues, challenges you've been confronting?
Yes, thank you. And also I am really grateful to be here with you in this panel. Well, as Produbanco, a bank in Ecuador, working in the PRB's adaptation working group has been a valuable experience to assess climate-related risks across our portfolio. However, during this process, we have faced some challenges, of course. I think that for us, our main challenge was the access to reliable and also local climate data. As part of our environmental and social risk analysis, we have a georeferencing tool in which we map our clients and also assess natural disaster risks. However, integrating comprehensive climate data is still a work in progress. Our georeferencing tool allows us to identify physical risks like floods and droughts, but this is only a part of the picture. I think that the main challenge lies in incorporating detailed data on long-term climate shifts like temperature rise, sea level rise, or the change of precipitation patterns, which are increasingly relevant for understanding how these risks are evolving over time. And the second challenge that we have faced has been the integration of climate risk assessment into our credit decision process. Nowadays, credit risk has been assessed based on financial and environmental metrics. However, climate risks that often have long-term unpredictable consequences are difficult to be quantified in financial terms, because it is not only necessary to identify these risks, we have to be able to measure the financial impact. That's why being part of the PRB adaptation working group has been a valuable opportunity to learn from global best practices and also to share experiences with other financial institutions that are facing the same challenges. The UNEP FI framework, along with the input of experts in the field, has provided us a clearer and more structured approach to integrate climate risk into our processes. Moreover, the feedback and the collaboration from other banks has been incredibly beneficial for us to understand how they are facing also these issues.
Thank you. And yeah, I'm going to come back to you in a minute and ask a bit more about some of those more specific areas of collaboration. But I know, Vanessa, you're from the Mauritius Commercial Bank. You've also been an active member of this working group. And, you know, I think obviously as a small island, developing state, you know, particularly vulnerable to climate change, this is a really important issue for you, as well as obviously the Mauritian government. So can you tell us a bit about what you're seeing in terms of particular sectors, how, you know, what clients maybe are you know, coming across your radar in terms of this issue around risk, climate risk?
Thank you. Yeah, the sectors. So basically, we looked to identify the sectors. We had to look at many reports, like the IPCC report, the National Adaptation Framework as well, and obviously our own portfolio. And based on those frameworks, it became very clear that the two sectors for us that are the most at risk in terms of climate risk are agriculture first and tourism. Tourism being probably the biggest challenge for us. It's good to keep in mind that tourism in Mauritius is about, indirectly and directly, is about 25% of the GDP, so it's huge. But still, once we say that, it's very difficult to get because there's no one-size-fits-all solution for adaptation. And it was very important to get some granular data. And this is very tricky because it's complicated. So we partnered with some external provider for that, and it's still a work in progress. But we didn't want to wait for the data to be available to start engaging with clients and try to help them identify their own risk. And it's a matter, after all, it's a matter of being customer-centric and trying to, you know, having this discussion with your clients and see how we can together identify their risks to be able to develop some financial solutions to meet their needs. So yes, this is how we we identify the two sectors and try to engage with our clients and try to see how we can actually help them identify those specific risks. Thank you.
Yeah, no, I think this issue of data is obviously, we were talking earlier over lunch about this, and I think it's a common challenge. I think we're all facing it. I do think, though, there's some reasons to be optimistic that, particularly with machine learning and, use of artificial intelligence, the tools to be able to better capture data once you've got it and analyze it and process it to make it in usable, user-friendly and relevant to different contexts. I think we are now, we're advancing quite a lot at the sort of global level. I do think, and it's, in fact, there was a colleague who might have possibly joined us in this discussion, but Nicola Ranger, who has been working on a number of initiatives, including how to make open source data around risk and climate risk and resilience more available, and in fact has an initiative called the Planet Resilience Data Hub, which is looking to address exactly this, because we all, I think, are constantly struggling with this data issue.
Definitely. No, it's a problem. And without data, you can't really be very specific about the solution. And also I wanted to add that in these discussions with the clients, what's very important for us, because adaptation is such a broad word. It's very complicated, and we need the common understanding of what it means. So this is why being part of a working group as well was very helpful. All those discussions with peers helped us and the clients in the end to identify those risks and try to see what the solutions in terms of adaptation could be. Very helpful.
Yeah, absolutely. And I think, so again, why, as I said in the intro, as the ARIC initiative that I'm involved in, and we've had a couple of working groups, one on physical climate risk assessment and what kind of common approach, maybe toolkit, etc., we can all use so that we are all working in the same direction. And the other is around metrics, what are relevant metrics that at the moment, I think most of the way in which we assess progress on adaptation is around finance, whereas that may be important, particularly in terms of incentivizing and ensuring that certain countries can better access climate finance to address their needs. On the other hand, I think when thinking about what is relevant both to us as we make decisions around risk management, around levels of materiality of physical climate risk, finance as an input metric is not obviously a relevant metric. So I think working jointly, and I think through ARIC and through PRB with UNEP FI, I think we are hopefully all moving in a sort of coherent direction together. So Denisse, maybe just coming back to you on that, because I know exactly through the PRB have been working closely with others, and how are you finding the partnerships in terms of enabling you to move forward?
Yeah, okay. Well, I think the same as you said. It is crucial to address physical impacts of climate change from a collaborative perspective. That includes, I think that not only the government, institutions, but also DFIs, clients, business, and also the public sector. In this regard, as Produbanco, we have implemented various strategies recommended in the PRB Adaptation Working Group for engagement and dialogue with our clients and also with policymakers. Our first key approach was with the Ministry of Environment, with the aim of actively participating in seminar projects, workshops, related to climate change adaptation. This collaboration has been essential to ensure that our actions are aligned with public policies and also to strengthen collective efforts in the country. Also, this collaboration with the Ministry of Environment has helped us to share knowledge, generate synergies, gain greater visibility and institutional support in implementing adaptive solutions. On the other hand, regarding our clients, for instance, we have used our georeferencing tool to identify the areas and clients that are most exposed to the flooding effects caused by El Niño phenomenon. Based on this identification, we have held meetings with our clients or possible affected clients to develop action plans. This approach not only have increased our clients' resilience to climate risks, but also has fostered proactive dialogue between parties to improve adaptation strategies. Additionally, in collaboration with the Ecobusiness Fund, we have developed a green financing policy and taxonomy in which we include eligibility criteria related with adaptation to climate change. So this initiative has been key for us in strengthening investments in sustainable solutions and also to providing clear incentives in the private sector.
Great. So looking at the risks, that's enabling you to identify the solutions, and then I guess more of the opportunity side of climate risk. And I know, Vanessa, working with clients as well, closely with clients. I mean, how are you seeing, are you starting to see these business opportunities around adaptation, around resilience, and what do they look like?
From their perspective, it's obviously, they look at the risk side of it, because if they need to preserve their business, obviously if there's no beach anymore, a hotel won't be able to sell their rooms at the same rate. So it's very obvious. But on the opportunity side, I guess for them, they all want to be seen as a leader in this field as well. And it's quite clear that they are all very much aware. We talk about reports and stuff, but when you live on an island like Mauritius, climate change is already visible, and it's very vulnerable. Even during COVID, we had no tourists, and it was already a big problem. So they are seeing it as opportunities as well as, you need to be seen as the leader in that field. And this is why we're trying to have these conversations, but also we developed a sustainable finance framework to help them with, including the adaptation criteria as well, to help them understand what adaptation means. And this was really helpful. And then we also have a sustainable loan that is quite interesting with a tenant that goes up to 15 years. It's trying to incentivize and help them in their adaptation journey. And we also collaborate with, as you said, with DFIs, but this is also an opportunity for the clients because because of that, they are participating in trainings, in awareness sessions, and we help them. For instance, the last session was a month ago, was about identifying a very simplified way of eligibility checks for adaptation projects. So that was very helpful for them. So they see this collaboration with their bank as an interesting tool for them to progress on their adaptation journey. Yeah. That's for sure. Yeah. But just to conclude on that, what's very interesting for us as a bank, like Mauritius Commercial Bank, we've been there for almost 200 years, and we finance the development of the island, all the industries. So we know very well how it works, we know the clients, and if we manage to partner properly with the government, with the adaptation plan, we are able to make a huge impact very quickly because it's small.
Yeah, great. And I mean, based on, I mean, as Tomás was talking about, I mean, it sounds like in Mauritius, you're maybe, the dialogue it's starting, but maybe still, still some way to go in terms of understanding more specific opportunities and sort of risk management solutions.
Yeah, it's the main problem, because we have a central bank at the central level. They have published actually a guideline for climate change. So all banks are supposed to be publishing their transition and physical risk, but it's not that easy because we don't have data. And this is why I'm saying it's not easy, but because of the data, of a lack of data, but it's also a matter of what kind of data are you looking at? Is it the same for all the banks? Because at the end of the day, they need to be able to compare as well in their own portfolio at national level. And this is quite challenging, I can tell you. It's progressing. There have been a lot of discussions going on, and we'll get there, but we definitely need some help from external help from providers, from data.
Okay, great, thank you. So Tomás, I mean, it's a really interesting initiative that you're involved in under the V20, the Global Shield Against Climate Risk. Could you tell us a bit more about that, how Costa Rica's engaging, why you're engaging in this initiative? I mean, explain what the initiative is, and maybe for those that are not aware, just briefly say who the V20 are as well.
Okay, no, thanks. B20 was created, I think, 3-4 years ago in a COP by an initiative from Costa Rica who shared the first B20 board. And B20 have some initiatives. And the idea is to strengthen the capacity of the countries to be more resilient and to manage the risk, the climate risk related. And I want to tell you that some weeks ago, last November, Costa Rica faces one of the most rainy stations in a century. And that was really, really a critical moment for us. We had a flood like 1.5 meters of water for very extended population fighting the most vulnerable, women, children, elderly people, poor people, small farmers. And that's the quantification of those losses are not still estimated. And it's a very high hit for this part of our country. And that reminds me a lady that I met 20 years ago when I was involved in a broker of insurance, and we faced, at that time, a very high rainy season. And this lady, named Maria, when I following this case, she told me, I received the pay from the insurance company, and I will get back my losses. But I have a problem. The problem is the government or the community government is not rebuilding the bridge, and my little restaurant is not capable to capture new clients or the same clients because there is not a good road to go. So there are three phases in an emergency. First of all is the first response to put alive the people, save the people. Secondly, the recovery of the infrastructure, the roads, the bridges. And third, the rebuilding, I hope, with adaptation. And this case is very sad because it's very common in our countries. and this community, 20 years later, have the same road in not good condition and the same temporal bridge there that will be fall in the next training station, maybe. So what I mean, these three phases are in our strategy of financial recovery. And Global Shield offer us this program. Costa Rica is the second country that are involved in this process. We have had a year of working through technical seminars with academia, with the officials of the public sector, with insurance sector, with civil society. And we have identified in this year different gaps that we have in resilience, different gaps that we have in building capacities in our country. And we expect to send the official asking for the technical assistant this February. And the idea is having with them some products that will help to the government to finance the first response, how amount will be the funds that we need to have there. If we have no adaptation, this amount will be bigger and bigger and bigger and won't be sustainable for fiscal purposes. Secondly, what will be the process, the via to catch up very soon resources to recovery the critical services, the critical infrastructure, in order to the communities and the people can begin his own recovery and can be, reopen their businesses and opening the dynamic of the economy. And third, what will be an instrument to transfer the biggest risks. But insurance will not be possible, the coverage of large events, if we are not in a process of adaptation, if we are not delivering some solutions for prevention in our countries. So Global Shield will be a great success. The insurance supervisor is the technical point, central point of coordination, but this is a project between the insurance supervisor, the Minister of Finance, and the National Emergency Commission.
Thank you, Tomás. And yeah, I mean, really, really interesting initiative, I think, that, you know, demonstrates the importance of bringing all the key stakeholders together to think about the risks, but also how to best manage those risks. I think, you know, what we're seeing with, I think, physical climate risk, it's, I mean, there's not a simple way of addressing it. It has to be in light of the context, the local context, but also I think a big part of the challenge is building capabilities, building capacity, building a common language as well around how we talk about these issues and fully address those moving forward. So I think, I mean, I'm conscious of time. I don't know if we have maybe 2 more minutes. If would ask each of you to maybe, if there's something you want to leave with the audience, just a final takeaway from your side, please, Denisse.
Climate change adaptation, I think that it is necessary because we are feeling all the effects all over the world. But I think that for all the banks or the financial institutions, it is still in process because we have faced many challenges. But I think that this collaboration with other banks, with the government, with the private sector, with our clients, it is really the way to go through it.
Thank you, Tomás.
Maybe a main idea, we need a vision, a correct public policies to work on and to build over that. We need a share the expectation, a strong dialogue with the different stakeholders. And third, we need a roadmap. We don't want more Marias or Maria's childs without education, because the fiscal risks are very, very high, and adaptation is everything. Our small countries, morally, we must work on transition, but the huge impacts are not in this process for our countries. Our country will face the most great events on climate change, and we need adaptation to have a sustainable and possible society for the future.
Mm-hmm. Yeah, thank you. Please, Vanessa.
No, as you said, adaptation is key, especially for a small island like us. It's because it's so important. It's easier to get the clients to understand, because mitigation is something very theoretical, as adaptation is very, it's something that can happen now in the short term. And, but I think what we need is definitely data, to be able to, granular data, to be able to be more specific, because adaptation is key, but we need to be aware that sometimes something that looks like a solution can also be a problem in terms of adaptation. So it depends on the context. This is why we need to engage with clients, definitely know better their own context, and obviously work with the other financial institutions, the central bank and the Ministry of Environment and Finance, obviously, a collaborative manner.
Great, thank you. So I think, I won't summarize the discussion. I've been trying to do a bit of that as we've been going through. But I do think, for me, and listening to all the discussions here at this event, recently at COP29, COP28, I think it's becoming increasingly clearer that we are starting to understand better what is really needed on climate adaptation and resilience. We're starting to understand what is needed to unlock the private sector, which is great. And we have now more tools. Data's still a challenge. Some of these open source data providers are coming, and I do think the role of artificial intelligence is going to really accelerate that. So there are definitely some positive tailwinds on this agenda. But the one thing we don't have really is time. We really don't have time to address this. So, I hope that in a year's time, when we are having a similar conversation at the UNEP FI Global Roundtable, we'll actually be talking about how much we've done in terms of really started to shift finance and capital into climate adaptation and resilience, because I think the urgency, the needs are so big and urgent, and we now need to get on and through collaboration really look to scale adaptation finance. So I'd like to thank you, panel, and wish you all the best with your work, and look forward to hearing about progress in the future. Thank you.